Thanks, Ashley. Good afternoon, everyone. My name is Evan Bradley. I'm the Chief Financial Officer for Campbell Property Management and one of the 5 partners in the company. I'm also a licensed CAM, and I work very closely with some of our largest clients on the major issues facing their associations, particularly the financial issues. For those of you not as familiar with Campbell, we've been in business since 1953 and manage over 400 HOA and condominium association clients from Dade to St. Lucie counties here in South Florida. Today, we are working with Seth and Luis from Gerstle Rosen and Goldenberg CPAs. They are going to be our accounting and audit experts, and they're going to help us understand what an audit is in the context of an HOA or condo and what to expect. So, Seth or Luis, do you want to introduce your firm a little bit?
Seth, go ahead.
Sure. Thank you, guys. Thank you, everybody, for having us today. My name is Seth Bernstein. I am one of the partners of Rosen Goldenberg. My associate, partners of the firm, Lavandeira. And appreciate you having us here today. Feel free. We have questions, and we hope to make this a really fun, enjoyable, and educational day. A little bit about we've been in business in 1985, and we roughly represent over 1,700 associations throughout the state of Florida. One of our niches of our firm and homeowners. Thank you.
Thanks, Seth. So just a reminder, this is for informational purposes only. This is not legal or financial advice. If you do have questions about your specific community, please reach out to your association's auditor or your management firm. We do encourage you to take advantage of the Q&A, but limit it to questions about the course material. Questions about your individual legal or accounting situation are going to be beyond the scope of our presentation today. So let's briefly go through an agenda here. We're going to start at a very high level, kind of what is an association audit and who needs one. We're going to go over what are the pre-audit procedures that your association needs to go through to prepare the information for an audit. Then we'll talk about exactly how an audit works and what does the CPA firm go through to make sure your books are in order. And then how should you as board members review that audit, and what should you look for to make sure that your association is in good financial standing. And then we'll take some Q&A through the Q&A feature. So if you do scroll over the Zoom options, you will see a Q&A option. Don't hesitate to use that throughout the presentation today. So first off, at a very high level, Seth, what is an audit as it relates to community associations? I think people hear the word audit and it has a lot of different connotations depending on what you've done in your professional life. So,
Louis, you want to?
Sure. So an audit is the highest level of assurance provided by any CPA. In essence, the auditor obtains reasonable assurance about whether the financial statements as a whole are free from material misstatements. That's the highest talk about the audit. Mm-hmm. In essence, there is a process of planning, collecting evidence, providing the report, and so on and so forth, that goes with the audit, that it makes the audit the highest level, and with the limitation greater than when someone does a review or a compilation. And right. The need of the audit goes down to the law, and Chapter 718 specifically states for the financial reporting of the associations that when the revenues are in excess of 500,000, so that the association is required to do an audit. Right. And there is a legal procedure for the membership to waive that, and I always let legal counsel to get into that. But yeah, basically, go ahead.
Yeah, we'll get into that here in a little bit. I think at a high level for people, I think some people think of a forensic audit when they hear audit, that every little detail may be combed through. Can you explain the difference between an audit for a community association and a forensic audit?
Yeah, forensic audit is similar to a regular audit, regular financial audit with regard to the planning and the collecting evidence and the writing the report, with the additional step of the potential court appearance. In addition to that, on the forensic audit, there is almost no sample testing on a forensic audit. Every single transaction is tested, identified, and researched, and that's why they're so time-consuming, and the fee is a lot higher on a forensic audit than on a regular financial audit. But there is a type of engagement that most associations can benefit from that will be a substitute to a forensic audit. And we can talk about that later, which is the AUP, or agreed upon procedure, which is an in-between. And we have seen that 99% of the time, it serves the purpose when board members think that they need a forensic audit because they have suspicious or they have specific issues with one specific element or segment of the financials, such as, let's just say, petty cash, for example, or a valet activity. So we usually are able to explain to the board that there's no need for a forensic audit, that we can do an AUP specifically to that target area of the concern.
Right. Yeah, I think that's really important to point out that a normal financial audit just has what you called sample testing, which means you're going to check random transactions to see if they match up with, you know, what has been recorded in the ledger and the bank statements, versus a forensic audit where you would analyze literally every single transaction. And I think people need to understand the difference there, that in a standard audit, not every single transaction is being reviewed.
Exactly.
Now, so the next question, I think you got into it a little bit, but when is an audit required for community associations? And I'll talk about that a little bit because I do have the statute here verbatim from 718 and 720. They're identical in this regard. So if your association has total annual revenues of 150,000 or more, but less than 300,000, you need to compare compiled financial statements. An association with total annual revenues of 300 but less than 500 shall prepare reviewed financial statements, and an association with total annual revenues of 500,000 or more needs to prepare audited financial statements. Whoops, I didn't mean to skip ahead. So there's a lot there to digest. First of all, what do they mean by revenues? How is that defined?
So we have seen board members that they go to the P&L and then they look at the budget, and they believe that by looking at the budget, they have the answer to what they need. And basically, it's total actual revenues. So it's not only the revenues from the operating fund, but it would also include revenues from your reserves, revenues from any special assessment and or insurance claim. And then to go a little more into detail, because of the application of AAC 606 a couple of years ago, so the revenues from the reserve would not be the budget amount, but it will be the total amount that can be recognized as revenue for that specific year. That's why we recommend the board members to reach out to the management team, manager, and management company, the CPA, to have a clear understanding of what are the actual total revenues to be taken into account when deciding if the association has reached a threshold for the audit requirement.
Right. I'm glad you clarified that. I think a lot of people do just look at the operating budget and don't necessarily realize that it is all assessment, all revenues really coming into the association, regardless of source, and that can quickly change which of these categories you fall into, particularly if you have special assessments at your association. So there were 3 different levels here required by statute: a compilation, a review, and an audit. So can you explain what compiled financial statements are?
Compilation is a basic summary of the association internal financials. No inquiries from management, no assurance provided. So it's basically just a summary. We got into a review, and now there is some limited assurance provided. the report specifically states that there's limited assurance, that there are no material modifications that should be made to the financial statements for them to be in compliance or conformity with the financial reporting framework. And then obviously the audit, which is the highest level of assurance provided. And, Evan, maybe you want to go over the fact that the membership can vote and go for the lower level and things like that.
Yep. So you've led me right into my next slide here. So a lot of people ask, do we have to have an audit? And both 718 and 720 say that if you meet the criteria on the previous page based on revenue, 500,000 or more, and remember that's all revenue, then yes, you do have to have an audit unless a majority of the voting interest present at a properly called members meeting vote to have a review or a compilation or no audit or no review at all. You can waive the audit requirement. So that has to occur before the end of the fiscal year and is only effective for the year in which the vote was taken, or you can vote for the upcoming year. I would say we strongly recommend never waiving your audit requirement. It's relatively inexpensive relative to your budget, particularly if you're you're going to be over 500,000 in revenues already. It's a very minor added cost for a lot of added benefit and protection for the members and for the board. And we do not recommend waiving your audit requirements. And if you just think about it from yourself as a board member, the optics of waiving an audit requirement are just really not going to look good. Do you really want to go to your owners and explain to them why you think waiving the audit is a good idea, particularly if you haven't waived it in years past? If for some reason you think this is relevant and necessary to you and you have to do it, statute does provide a way. And I would say if you're going to do this, please consult your association counsel on doing it properly for your association. Remember, it would be a membership vote. This is not something the board can do. All the members have to be notified and have a chance to vote on this. And again, we would strongly recommend not doing it, but it can be done. Do you guys have any thoughts on that?
Evan, I want to add also that we have been engaged by associations that previously waived the requirement, but they needed some type of financing. And the banks came in and one of the first things they asked for, audited financials for the prior 2 years or 3 years sometimes. So it might be that the board thinks that they don't need the audited financials. That might be the case now for 2-3 years in a row. They might need it. After all, it's South Florida. We always have, the unknown with the hurricane storms and the certifications and the need for the financing. So a lot of times associations did not expect that. And then they have to go back and hire a CPA to audit the books for the last 2-3 years to be in compliance for that loan package application.
Right. So now that we've determined that you need an audit, you qualify and you have not waived your audit, what's going to happen next? So we're going to go through some pre-audit procedures. And the first thing that's going to happen is you're going to pick a CPA firm. This is not something that your management company can do. You need outside CPA representation to perform an audit. And then what documents are you going to ask for, or what documents should they be maintaining throughout the year to make sure that they're ready for an audit?
During the year, first of all, the associations with management companies should be receiving a monthly financial package from their management company. The boards detailing, showing the bank reconciliations, the schedules, and the monthly general ledger, as well as schedules related to what's going on in the financial, and should be reviewing them on a monthly, just to make sure that the financials are in order and that things are being looked over, like any outstanding checks. Those are things you're going to want to look at, outstanding deposits, and look into why are these still outstanding. Other documents association is the insurance invoices. One of the items that we always need in the audit is a copy of the actual paid insurance. We also get a copy of the deck, make sure that there's coverages, but again, those assurances are put to the insurance companies who write those coverages. Other that I will request will be copies of any credit card statements if associations would have those. We want to know what their usage is and who's holding on to the.
Okay. Someone asked a good question I did want to just address from the prior slide. They mentioned their documents state they need an audit, even though they are under 500,000. So I do think it's important to point out that your documents can be more strict than the law. So if your documents do require an audit, regardless of where you fall on that revenue spectrum, you do need to follow your documents. So going back to this slide here, what documents are you going to request from the association or the management company as part of the audit?
At the end of the year, I send a list, the individual bookkeeper. But at the end of the year, we'll usually we would ask for a December financial pack, as well as the subsequent month financial with all the reports and schedules. We would also need access to all the during the year, copies of the minutes for the year.
So basically, to expand on what Seth was mentioning, the year-end package from the management company is a good start. Management companies have most of the reports that are needed within that year-end package, and there are additional records that we request from the manager directly, such as the meeting minutes and the insurance policies, the budgets, and for associations that have been going through or that are going through any capital projects. So we want to have access to the bidding process, the signed contracts, and all the documentation relevant to that capital project and all the elements within that. It's very common for the associations when they have a significant capital project to also develop a budget, and people get confused and they say, well, we already provided the budget. Well, one thing is the operating budget versus the budget for that special project. But even prior to all this, the managers can be working towards the audit, even though the year has not been closed. And the board members should be looking at the package. They should be looking at specifically fund balance within the balance sheet. And then they will be looking at the prior audit to see if fund balance has been reconciled, if it matches with the prior audit, to identify any accounts that they believe might be obsolete or might be in need of adjustments, so that any account that can be adjusted internally prior to the audit can be done by the management team in conjunction with the board prior to closing the year. Seth, you want to expand on that?
I'm good.
Okay, so I think a lot of board members on this call are used to hearing about a representation letter, or we call it a rep letter. So that's one of the first things that you're going to send them. It's usually a couple of pages, and it's a little wordy. What is the rep letter, and why is that important?
Okay, so let's do a really quick ABC. So the initial step is to send the engagement letter. So the board selects the CPA firm, and then the CPA goes through the planning of the audit, the planning process, and within the planning, the CPA has the notifications, has the opening meeting, then it comes, the field work step, and then eventually to draft a report and present that to management, and then to have the management response have the closing meeting, and then after that to be able to issue the final report. Prior to that final report, and usually happens after the management response and or the closing meeting, we would have the board of directors sign a client representations letter. Sometimes we see that board members get confused and they think that the engagement letter was the client representations letter. So the engagement letter is to sign the CPA. The client representations letter is a document that is signed at the end. Is basically the board members giving the required written representations to the auditor. And let's talk a little bit about that because Seth has been with the company 21 years. I've been with the company 20 years in May, and sometimes we get some pushback from some members that they don't want to sign the client rep letter. Well, number one is required is the document that it captures the written representation by the board, where they acknowledge that they are the ones responsible for the internal controls design and implementation. They are the ones responsible for the financial reports. They are the ones giving written representations that everything has been provided and that they have no knowledge of fraud or things to that nature. It's a 3 or 4 pages document, very technical. My advice to the board members is to seek help from the management team or the CPA if they have any specific questions on any specific point on the letter. I know myself, the letter is kind of like, it has a heavy language, but it's all down to the board members understanding and recognizing that they are the ones responsible. We have seen multiple times that board members believe that it is the management company, the one responsible for the financials, and it is not. The board members hire professionals like the management company, like the legal team, like the CPAs, but the board members are the ones ultimately responsible for the design, implementation of the internal controls and the financial reporting.
Okay. So now they've engaged your firm and they've supplied all of the documentation, or the management company has. So how is the audit actually conducted?
We would usually at the end of the year, once the board has approved the December year-end financial statements, then the management us that the files are ready for the audit to begin, and they would start sending us the records, the December financial package and the January financial package, insurance, and the minutes, the budget, everything we discussed. And what we'll do is we will start, conduct the audit on our end, putting it into the computer. What we do is we maintain and review all the schedules and forms that are being prepared by management, and making sure that all those reports are clean and clear of any material statements, and that the representations being presented in those files are correct, and that the homeowners can make decisions, whether it comes down to future sales in the community, getting bank loans. This gives assurances, that the numbers being presented are accurate. We look it through during the audit, as Lewis was explaining. We will read the minutes. We look through the credit cards to see what the processes are between management and the board, and look at the internal controls. That's a very important part of the audit these days, is really hammering the internal controls of the association and their communication with management, and the responsibilities them from management to company to the property manager. As auditors, we're looking to see that the associations are maintained properly, by you, the board members. As Lewis mentioned, it is the responsibility of the board of the financials. So we like to see that the financials are in good shape. A lot of times boards just put all the responsibility on management, and then come out of the woodwork when the budget needs to be raised. During the course of the audit, we will look to our tests, and if things are out of line with the budget. From budget to actual, we will give you guys recommendations on any changes or any updates or any items that we recommend. We would also look to see that if the association had any reserves, what are they doing to fund the reserves accurately and properly?
Right. Yeah, I think in the wake of Surfside, there's a lot more attention being paid to reserves. So there were some questions from people signed up to say kind of how are the reserves looked at in terms of an association audit? How deep do you guys go into that?
Well, we're not professionals, Louis.
Yeah. So, Evan, I wanna give a little bit of an introduction. FASB is the Financial Accounting Standard Board. It's the independent nonprofit organization responsible for establishing accounting and financial reporting standards. Following GAAP. So FASB uses GAAP as the foundation for its comprehensive set of approved accounting methods and practices. So FASB, through the codification, they have specific codes for every single industry. For the real estate Common Interest Realty Association is AAC 972. So GAAP requires that the supplementary information on the fusion major repairs and replacement be presented just to supplement the basic financial statements. But this is not part of the basic financial statements. So FASB requires that this supplementary information is presented as part of the financial reporting, even though it's not part of the basic financial statements. So we apply certain limited procedures to that required supplementary information in accordance with audit standards. We do not express an opinion, and that's what Seth was about to say, because we are not qualified. We do not express an opinion or provide any assurance on the supplementary information. That's why if you pick up any audit report done by any CPA, when you come to that section of the supplementary information, it says unaudited on the top. And that's because AAC 972, Real Estate Common Interest Realty Association, provides the guidance on the why. So any reader of the financials can check AAC 972 and check and see why the CPA says unaudited on the supplementary information. So basically, we're not engineers. We don't have the knowledge or the expertise of the license to see that our column has a replacement cost of $500,000 or a remaining useful life of 3 or 5 years. We rely on the information by the engineers, and we apply certain limit procedures to that study. And obviously, we go to the general ledger, we go to the research study, and we follow the transactions, and we check the disbursements, and we tie that to any signed contracts, to the A1A, certificate of payments. So we do apply audit procedures to the reserve information, but I wanted to emphasize that we cannot provide assurance on the actual supplementary information. We're not qualified for that.
Right. Yeah, I think the really important takeaway for the board members on this call is that your auditor is not an engineer or a reserve study professional. They're only going to be able to take in the information they get from you. So if you have concerns about your reserves, get a professional reserve study. Have the engineers come out and really analyze your property, because that's really the best source. Do not try to rely on your audit or auditor to make sure that your association has proper reserves. So,
and Evans, probably you remember a few years ago when it was required by law to have the research study done every 4 years, and then one day, on a happy sunshine day, the state decided that it was not required anymore, that it was recommended. Unfortunately, look what happened with Champlain Tower South, and all the professionals in the industry are expecting changes in Tallahassee. So I wouldn't be surprised that the research studies go back to be required and no longer recommended.
Yeah, I candidly would like to see that, actually. I think that would be in everyone's best interest. Okay, so the last questions people ask, do you guys look at the association documents at all as part of the audit?
Seth?
What we do is we don't really look at the documents, but we do get copies of them and bring them in. We usually will look at them if there's things going on when it comes to voting or what the financial requirements are of the association. To that effect, we'll look at the documents, but we don't really read them. We do ask for a copy to put with our record.
Right.
So
Okay.
Evans, basically, because the documents are a legal document and the attorneys are the only ones that can interpret the law, we don't read through all the documents, but in associations that have easements, and associations that have the CDDs, we do go to that specific area within the documents, and we look at the guidance within the document to make sure that the financials are being produced following any specific requirements. Also applies to associations that have multiple buildings, and the documents specifically state that surpluses are to be used by any of the specific building and not as a whole for the common area. So we go to the condo docs and we read as much as we need, so that when we provide opinion, we know that we did all the homework that we were supposed to do.
All right. Okay. So now the audit's complete. You guys have done what you needed to do. What is the role of the board in this process? And I think you guys kind of hit on it earlier, which is they are ultimately responsible, right, for these financial statements.
Yes. We recommend when we issue the draft, a lot of times the board just signs the representation letter and sends it back to us and says, finalize it. Okay. We would prefer the board's involvement, review the financials, look and see what's going on, because the main difference between the audited financials, even you in the compilations, that we have notes that are a part of these financials. And these notes give a nice little background of what your associations, if a lot of people don't know if you're an HOA or condo, it will tell you. It fills you in. What are your association's reserve responsibilities? If there's anything going on in the community, it will define those and explain to you what's going on. You don't understand any special assessments or loans the community may have. The benefit is review the financials. If you see any questions that, concerns between our issue and what you got from management, that's the time to reach out to us, because during the draft, we would prefer to meet with the boards and go over any questions or concerns that they may have.
Right. And then, there's a section of the audit that's recommendations. So what are those, and kind of what are the most common recommendations that you guys are making out there?
Like we said earlier, one of the recommendations that we've been giving is if we have this management inquiry, as a lot of that we go out with the audits. Management inquiry is like a little book report giving us a background on with the associations. And those management inquiries help us get an idea. A lot of the recommendations we give, believe it or not, are get updated reserve studies, because they're not budgeted properly. Been doing so much, voting for so much partial funding, that they've lost track of what the true costs are. Some other things that we look for, if the association doesn't have any line of credit, last thing that they need this management relationships. If there's a storm and you need fast, you can't special assess and collect the money in a week. But if you have these lines of credit, we recommend maybe talk to your financial institution, up a line of credit so you have some cash flow readily available. And one of the other things that's become a hot topic lately is security deposit. We have been following out more. The state's got some new changes on what they recommend and prefer that you do to return these funds. So we do question them to see what the board's involvement is. So we will give you a management letter now if you have security deposit to look and see how far, because those reports should be brought up to date, you know, on there from 2009.
Mhm. And then the big scary one on the audit, which is deficiencies. So what is a deficiency on an audit, and why is that so important?
Louis?
Well, I'm pretty sure that, we can talk a significant amount of time going through findings and deficiencies. Some deficiencies had obviously ground for the qualified opinion, or even disclaimer. Seth and I were discussing prior to the meeting on the deficiencies that we find. And a lot of associations, when they use management company, they kind of they benefit from the internal controls that the management company bring in with the accounting team. And obviously, or at least in my experience, the deficiencies that I have encountered on audit, financial statements produced by management companies are much less than the ones that I have found on associations that I self-manage, because the management team has a lot of steps and procedures in place. I think my audio is coming short. Seth, you want to take it?
Yeah, some of the deficiencies or budget is expense. A lot of these, when they're doing their budget, don't plan for that, and that can have extreme cash flow problems for the association if that's not paid attention. Other deficiencies, again, reserves being underfunded because they didn't have reserve studies, or they continuously voted to have partial funding. This might be the time to discuss with your legal as well as management that if you're doing specific component, maybe you might want to do a vote and go to pooled funding, because it might be the more of a, better financial situation for the community. One of the other items we look at is the cash, to make sure the association is within the FDIC limits. It's a very touchy subject because a lot of management companies have relationships, and the banks want you to put all their money within those banks. So we recommend, if that's the case, maybe see if they can spread some of that money out through CDs and various financial institutions, just protect the association's interests. And remember, you cannot invest the association's money in the stock market. It's not yours to invest. Your responsibility is fixed returns, so the money is there, not to invest it in the stock market.
Right. So, yeah, I think, as you board members are reading these audits, read the notes, read the recommendations, read the deficiencies. Those are the three most important things. Really, you shouldn't have any deficiencies. But if you do, pay very close attention to those and what they are. So will you guys meet with a board that has questions about the audit or the report or the draft?
Yes.
Yes.
Yeah.
We meet on an annual basis. We try to meet prior to or even prior to the audit. And we try to make that to coincide with the budget process of the association. And that time we begin with collection of evidence for the audit, and that usually happens between later September or October. So by then, most associations have Q1, Q2, and maybe Q3 financials. So there's a significant amount of data that the CPA can be looking at. So that pre-audit meeting, it helps to set the stage for the audit, and it helps to accomplish the completion of the audit within 120 days, because the CPA is in direct contact with the management team and is already collecting evidence for the audit file, and is making sure that any adjustments to equity and reserves are posted by the management team prior to closing the year.
As you know, Evan, too, we have a very good relationship with your accounting department. And a lot of our clients will actually review financials, some of them on a quarterly or biannual basis, just to make sure that, you know, everything is doing well and is in order. As our clients know, our engagement letter is not just for us to do the year-end work, it's for the whole year. So if you have questions that you're not sure management's doing things correctly, my clients know that they can email me or call me on my cell phone for a quick question. I find that that's really works out well with management companies, because it just gives them more assurances that they're handling things properly.
Yeah, and we love to be able to reach out to the auditor during the course of the year, rather than do something and then find out later in the audit it wasn't correct. If we see something that's unusual or we haven't seen before, we always reach out and ask the auditor, kind of, what do you think and how do you recommend we handle this, and try to be really proactive on those more complicated financial issues. So let's get into the Q&A here. We have some time left. There were a few people who asked about kind of who has access to the audit and all that. So let me cover that first. And the audit is absolutely an official record of the association, and every member of the association has a right to request it and needs to be provided it. But in addition to that, within 21 days of when the audit is received by the association is supposed to notify the members that a copy is available free of charge to them. So that is part of the statute related to audits. Let me go in here and look at the rest of the Q&A. Are financial audits required on a yearly basis? The answer is yes, if you meet the criteria based on the statute we discussed earlier, or your association documents. Greg asks, will banks accept a review or do they require an audit when they're considering lending money to the association?
Usually from what we see, the banks usually will ask for a third-party CPA prepared report. Usually it's an audit because they want to make sure it's, you know, everything's been taken care of, and they look at a lot of things. But banks might accept a review as well, but they definitely look for the audits. I have clients that call me and say, hey, I did taxes only the last few years. I'm going for a loan. I need to hire you to do the audits now because the bank needs them. So in a lot of cases, you know, associations have had to go back and redo and conduct the audits to just be able to get a line of credit. And another thing, banks look at the bad debt expense in the budgets to make sure that the associations are paying attention and paying attention to the allowance and budget accordingly.
Right. There's a question, if our bookkeeping accounting is handled by a CPA, should we have an independent audit?
Definitely the bookkeeping, being a CPA, he's producing the monthly financials. He or she should not be auditing her work herself. So the association should hire an independent CPA to perform the audit.
Yeah, you always want to have a second set of eyes. That's the whole point of an audit, is to review what's being done on a monthly and annual basis.
So there's a whole chapter on ethics for CPAs that do a monthly accounting and doing an audit. Yeah.
Right. How should you pick an audit firm, and what should the board look for in an association auditing firm?
To me, the important thing is communication. When you talk to your management company, they always have a list of vendors that they choose to use. And one of the things I would look for in your CPA or any vendor is communication. Do they respond to you on a timely basis when you have an email or a question? Are they getting to the work for you in a timetable that's fair to you? Are they communicating? To me, that's the biggest thing. Does your vendor communicate with you?
Yeah, don't be shy on questioning the CPA. how many years of experience, how many clients, um, how many cases related to condo and HOA associations. Do you do meetings free of charge? Are you able to come to the association? Can you pick up a phone call? Can you help me with special assessment question? Don't be shy asking those questions before you engage a CPA.
Yeah, I'll just tell you from the management side, we occasionally see boards who they use an auditor who they're friendly with or who they may use for their private business or something. And small business is not anything like a association, and you really want to make sure that you're using somebody who specializes in association audits, because it's very different. It is very different. Let's see, does the entire board sign the representation letter? The answer to that is no. A representative of the board. Are residents allowed to see the audit? We talked about that. Can an association obtain a credit card in its name? The answer is yes to credit cards, but no to debit cards. Let's see here. That's not a good question. Do you recommend doing a reserve study before the budget? Yes. I mean, if you've not had a proper reserve study in at least the last 3 to 5 years, probably less than that, probably closer to the 3-year mark now with inflation, I would say it is highly recommended that you do a reserve study prior to doing your budget.
100% recommended. And most reserve engineer companies now offer a package that they do a full reserve study, and then they do annual updates for the 2 or 3 subsequent years after the original study. So yeah, 100% recommended by us.
Right. So I do see some specific questions in here about some specific circumstances. Again, we really can't get into the details of your association, so I'm going to have to avoid those questions. Should the audit show a year-over-year comparison? In other words, current year to prior year?
If the client would like to see a comparative, all they have to do is kind of ask, and we can make that happen for them.
Okay. How many months of operating cash should be on hand? I hear that one a lot. What are your recommendations?
That's the $1,000,000 question. So how much is too much equity, Evans? Huh? So some people say 10 to 20%. Some CPAs say 1 month to 2 months. Some associations, they run the budget really tight, and the mentality is ask me for the money when you need it. And when they come and they ask, what's your advice? I always say the same. You're running a really tight budget. You don't have cushion for any emergency, so you're always going to have to go to the membership for anything other than your line items in your budget. So it's not too wild to have that 1 to 2 months or 10 to 20% in equity to help for those unexpected emergencies. Some associations even go a step forward, and then they even include to have savings for insurance deductible. It's all down to management style. It's all down to the specifics of the association and the ability to raise the budget.
Right. Yep. It's definitely a association by association decision, and you definitely have to take into account the financial situation of your membership and the association. So, well, I think that's about it for for the questions here. We're right under 1 o'clock, so I appreciate everybody joining us today. Hopefully everyone appreciated the high level overview we were able to give related to audits. Obviously there's a lot more to it, but at least you have some idea of what to expect when you're having an association audit. So as we stated earlier, we're Campbell Property Management. We manage over 400 associations, condominiums, and HOAs from Dade to St. Lucie counties. If you are interested in accounting or management services, please don't hesitate to reach out to us. And if you need an association audit or have concerns about your association auditor, don't hesitate to reach out to Gerstle Rosen Group. So, Luis, Seth, any parting words here today?
Thank you for having us. We are getting back into budget season, and I would hate to say almost back to tax season. So any individuals that are looking to make a change or have any questions, feel free to drop myself or Lewis an email. We're here to answer any questions. It is budget time. So for those individuals who may be looking for a third party CPA firm, maybe to get a bid, feel free to reach out to us. We love the opportunity to work with everybody.
All right. Well, thank you very much, everybody. Appreciate you coming. Have a wonderful rest of your Tuesday. Seth and Louise, thanks for your time, and we'll talk again
Thank you
soon.
so much.